A region that struggled significantly in recent years and had a very difficult economic and political 2019 was the Middle East and North Africa. You're fully aware of the situation regarding the conflicts in the region. We also saw protests spread to countries like Algeria, Lebanon, Iraq. We've seen unrest rising in a number of parts of the region. The political challenges are well known. Problem is the economic challenges are getting bigger and bigger. The longer the oil price stays low, relatively speaking, and it's been relatively low for 6 years now, the more the oil exporting economies in this region suffer. So if you were in Saudi Arabia or the United Arab Emirates and you were used to triple-digit oil prices until 2014 and your oil price was cut in half, you can imagine what that's done to government budgets, you can imagine what that's done to government spending, and you can imagine the impact that's had on the economy. The economy in this region grew by less than 1% last year. Keep in mind the population of this region is growing by more than 2% per year. So you can imagine what this is doing to wealth levels in the region. You can imagine what this is doing to people's moods in the region. And this is why we're seeing an increasing amount of anger in a number of Middle East and North African countries. I mentioned oil price. Despite the fact that we've seen attacks on Saudi oil installations and in the threat of a major conflict in the Gulf, oil prices continue to trend downwards. And the major reason for that is, as I mentioned, the United States. We are now producing so much oil and so much gas that there's very little fear about the supply of oil and gas in markets today. And when you look at demand levels not really growing much, you combine that with a lower supply side fear, and you get downwards pressure on the price of oil. And it looks like, barring a huge conflict in the Middle East, that will continue going forward because we're not looking at substantial increases in demand for oil over the next couple of years, and we're looking at supply levels that have the potential to continue to go up substantially over the next couple of years. Another region that's been struggling in recent years is Sub-Saharan Africa. Now, for many, this is the long-term growth market. The population of Sub-Saharan Africa will grow by 1 billion people over the next generation, over the next 30 years. 1 billion additional people will live in Sub-Saharan Africa. So many parts of the world are dealing with labor shortages and falling working age populations. This region has a soaring working age population and tons of potential workers. But can the region create the jobs? That is the big question. We've seen investment in the region grow in recent decades, but in recent years, that investment has stagnated. China and India had been investing heavily in this region, but they've scaled back to some degree their investments. And it remains to be seen if we're going to see a pickup because, again, oil prices and other commodity prices have been low. The impetus to invest in this region has declined. And that's a major risk going forward. We're going to see population growth continue going forward. We need to generate wealth. We need to generate jobs. And can we do that? We can't do that when the economy of Sub-Saharan Africa is growing by just 3% per year. This is an economy that needs to grow at 5, 6, 7% per year to generate those jobs and create the wealth that the region needs. And what is one of the big problems in the region? There are success stories. There are many success stories in Sub-Saharan Africa. Countries like Ethiopia, which is doing tremendously well, Ghana, Cote d'Ivoire, there's a number. But the big economies, there are 3 major economies in the region right now. Nigeria and Angola, which are oil-producing countries who have been hit hard by the fall in oil price. And South Africa, which has been the most developed economy in the region, which has been struggling tremendously in recent years. Those 3 economies, they're barely growing at all right now. So the big economies are letting down the region, and we've seen that really hold down growth in Sub-Saharan Africa. And I mentioned population growth, 1 billion extra people, a huge increase in the number of working age people in that region going forward. So finally, the region that's performed the worst in recent years has been Latin America. Over the last 6 years, it's barely grown at all. And again, it's the major economies of Latin America which are holding the region down. Brazil just came out of a recession where it shrank 10%. Argentina is currently in a recession. Mexico is right now not generating any growth. And Venezuela's economy is in complete free fall. And in fact, you see that reflected there by economic growth rates by region. Latin America has been the least successful region in recent years. There's a number of reasons for this. Again, low commodity prices have a big impact. The other thing is a lack of economic competitiveness. A lot of businesses are simply saying, we would rather source products for this region from China, from Vietnam, or maybe from the United States, than to build factories in Brazil or Argentina or other countries in the region. And that's something this region needs to tackle urgently if it's going to generate growth in the year. So that was a trip around the world like we always do. What are some of the key points you should take away? Well, that chart shows where the growth will be coming from this year. Now, assuming the Chinese economy grows at 5.8%, and that because of this coronavirus outbreak is a big assumption at the moment. Assuming it does, it'll about 32% of the world's additional economic growth will come from China this year. Now, just a few years ago, this chart would have shown the United States and China both accounting for about a quarter of additional output. But even as the Chinese economy slows, as it gets bigger, its share of additional global economic growth grows. The United States will account for about 17% of additional growth. This is on an assumption of 2% growth in 2020. That's still relatively substantial. India will account for about 8%. And the EU, and that's minus the UK now because I've already kicked them out, will account for about 6%. So the growth markets haven't really changed that much, except that China is, of course, an ever more important driver of growth for the global economy. So you can understand when there's uncertainty over something like the coronavirus, just what that means for your business when your potential growth is coming from a single market like China. Over the next 25 years, the structure of the global economy won't change that much. I mean, your biggest economies now will largely be your biggest economies in 25 years. India will be the notable exception, even as India's economy has been disappointing. Just the scale of the country, 1.4 billion people, to rise to 1.7 billion in the next couple of decades means that it will become an ever more important part of the global economy. And some other emerging markets will find their way up the list, but at a relatively slow pace. So what should you take away from this presentation? We are headed for our second consecutive year of below average economic growth. 2019 was the first. 2020 will be the second. We're not forecasting a hard landing for any major economies at the moment, but we are forecasting relatively sluggish growth this year. It's becoming harder for the rich world to generate growth unless we can improve the productivity situation in the United States and Europe and Japan and elsewhere. It's going to be hard to even generate 2% growth in the decades ahead. That's a major challenge going forward. Emerging markets are going to continue to be divided between the haves and the have-nots. The haves are those that are competitive, that have made their economies competitive, or just happen to be located in Asia, which is the main growth market. The have-nots are those that are not competitive or poorly located geographically. That split between those two is likely to grow in the years ahead. And finally, geopolitical and economic risk levels are going to remain high. They've been relatively high of late. They will remain high for the foreseeable future. There is a lot of upside risk in a number of parts of the world and a number of industries, and that bears watching going forward. There are a lot of issues that are in flux right now, whether it be the coronavirus, whether it be Brexit, whether it be trade disputes, that have the potential to cause significant harm to the global economy going forward. So that's all from me. If you think of questions or something after the fact, that's my email address. Please write it down or visit our website there, and I'd be happy to answer anything.